Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street. An action-packed day is what we can really see unfold in terms of the sectoral indices, the benchmark moves, as well as some of the stocks that are buzzing in trade right now. Of course, after this whole month of volatility that we've seen so far, and the FY23 returns kind of have actually weakened the investors' sentiments. But what do we expect going forward from here? We'll discuss all of that with our expert of the day. But first up, a quick check on how the markets are doing at this point in time. Well, the Sensex and the Nifty are showing some kind of a relief bounce in today's trading action after the slippage yesterday. 17,045 right now for the Nifty. It's up by 57 odd points. The Sensex hovering 200 points higher at 57,835. That's up by 0.3 odd percent. Let's also look at the broader markets to see if there is any support coming in from that one as well. So both the mid cap and the small cap 100 indices are also up in trade today, but the small caps leading the pack with 0.6% of an upside today. India VIX levels have cooled off, 2.6% downside for that one, around 15.5. But the market breadth remains fairly divided at this point in time, with 25 stocks in the advancing category of the Nifty 50 stocks and 23 stocks seen declining. The top gainers at this point in time include heavyweights such as Reliance Industries. You also have Bajaj Finance, HDFC Life, Bajaj Auto and Titan, all up by about 2 to 3.5% in trade right now. But you're actually seeing most of the declines coming in on the FMCG pack stocks like HUL, ITC, Britannia. They are declining in trade. Tech Mahindra, Power Grid, they're also seeing a cut of 1 to 2 odd percent in trade. In terms of the other sectors on the Nifty index, again a mixed reaction with losses being seen on IT, FMCG and pharma. So the defensive pack is actually declining today. On the other hand, some gains coming in on the media stocks. You have half odd percent of a gain for the private banks. PSU banks up by 0.7% odd. Financial services in tandem as well. The Nifty Bank overall is up by 0.4% odd. Slight gains coming in on the auto pack, metals and the realty pack as well, with just about which are trading just with a positive bias above the flat line in today's trade. Let's also welcome our guest for the day. Mr. Rajesh Palviya joins in from Axis Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, it's been a volatile week so far, in the markets, and of course we've been seeing this volatility continue from the time the financial crisis and fresh worries over that emerged on a global platform as well. Your thoughts on whether this bounce will sustain in the markets, or are we going to be heading towards another choppy trade?
Yeah, good afternoon, Sakshi. Yeah, it's a very volatile sessions which we are witnessing since last couple of weeks. But if you look at the near-term setup, since last 3-4 trading session, Nifty is trying to hold 16,900 on the closing basis, which is giving us some bit of confidence at this level that most of the put writers are also adding the position at 16,900 strike, which clearly shows that near-term chart structure is suggesting that we are trying to form a bottom at around 16,900. If at all Nifty manages to cross above 17,100, 17,150 level, then possibly we can expect some short covering rally in the market, and possibly Nifty can inch up further higher towards 17,250 for coming trading session. So as of now, we are expecting that market to remain in range 16,900 to 17,250. This could be the possible range for some couple of weeks. Either side breakout or breakdown will decide the major direction for the market, as we have lined up with the Fed outcome for this week. So that is another important trigger for the market, what kind of stance they are going to take for this meeting. And if anything comes positive, then market will start recovering, because most of the indices, sectoral indices, are in the oversold trajectory, and Nifty and Bank Nifty also are in the oversold zone. PCR ratio is also indicating that there could be some short covering rally we can expect in the coming trading session. So as of now, it's a range bound session. 17,200 to 50 is the key resistance area for any pullback, and on the downside 16,900 is the important level for the Nifty.
Okay, 6,900 important support level for the Nifty, but there could be some range bound sessions is what we can expect. But interestingly, there's a report by Bank of America Securities which has now slashed the year-end target for the Nifty by 8% to now 18,000. Now, Bank of America Global Research believes that it is going to be a volatile year again, with a range of 16,000 to 18,000 levels for the year. And what they have said in their report is that this could well be the worst performance of the Nifty in the last 7 years, and it could also underperform the emerging markets and debt markets as well going forward. Your thoughts on the kind of report findings of Bank of America Research? Do you have some consensus to this? Do you believe it is going to be another flat year for the markets?
So, Sakshi, I have some different view because we are expecting that yes, definitely next 3-4 months is going to be very volatile. But we are almost near to the interest rate cycle hike which we are seeing in the across all central banks, and it's going to take some pause around another in 1 or 2 policy action. So then it can give some bit of confidence to the market, or some the cautious approach which we are seeing in the market, that everybody will start finding out the good value buy in the market. It could be a volatile month for next 2-3 months, but yes, we expect second half of this 2023 could be good for our market. So our strategy is buy on dip should be your strategy if you are investor. Could be there could be downtick also towards 16,500 or 16,200, but we are expecting second half could be a positive for this market, and we can see good amount of rally in the market in second half of 2023. So if any dips comes due to this global uncertainty or global triggers gives you any kind of uncertainty or volatility in the market, one should start buying good blue chip stock in this kind of decline in the market.
Sure. So, what is the kind of target that you are working with for the year end? Since you believe that you're more positive and more optimistic in the second half of the year, Bank of America Securities believes 18,000. Do you believe there could be a further upside from these levels as well?
Yeah, so we believe that 18,500 could be the target for this year end. So we expect second half could be a good for the market, and 18,500 could be the target.
Okay, 18,500 could be the target. And also, another report that suggests that the stock exchange daily cash volumes have slipped over 20% in FY23. Now, this is the most fall that we've seen in 11 years as well. How do you read these data points as well? Of course, when we talk about the volumes in the derivative segment, they still remain close to all-time highs in every month since last year as well. But it's the cash volumes that have seen a slip. In fact, when we compare it with the last 2 or 3 years, there seems to be a sharp decline. Of course, there could be a high base, and due to the COVID, the kind of rally that we had seen. So FY20 was like 10% or so. The cash volumes, FY21 was 70% cash volumes, then FY22 was 9%, and FY23 there's a slip of 20% odd. How do you read these data points, and what should investors and traders really read into it?
So definitely, year 2021 was very good for the market. Even 2022 was very good for the market, and we have seen huge surge in the volumes as well as the participation, the new accounts. Every So financial market was booming for 2021 and 2022 calendar year. But yes, since last couple of months, we are seeing that volumes are shrinking because the market are in the corrective mode, and mid cap, small caps are not able to perform. So generally, when you have a certain market, then generally we see participations increase, and participations comes in the mid cap, small cap space also. That also lead to the cash volume increase. But yes, since last couple of months, the volumes are shrink because market is not giving the clear direction, and lot of uncertainty is there. Global markets are also not supportive. A lot of news flows are coming from the domestic as well as from the global front, which is also keep everyone on the sideline. So everybody is waiting for some this monetary policies are also not giving any kind of pause at this moment. So till this uncertainty not gets over, these kind of volume scenario is going to remain in the system. So we believe that another 2-3 months are going to be tough for the market, and volumes are going to be remain on the low side. But post July or August, we believe that this market will start picking up, and then we can again see the good participation in the market, and market will start. Once the market start recovering, then again this volumes will start again picking up.
All right, understood that, there could be, the markets could be well under pressure over the next 2 to 3 months. There could be some difficult times, and the second half could be definitely a recovery is what we can expect. While on the one hand, the stock markets have been coming under pressure due to the global uncertainties because of the financial crisis that we've been witnessing, which started off with the SVB crisis, the Silicon Valley Bank collapse, and then we also saw the Signature Bank shutdown and Credit Suisse, crisis also emerging, and that is creating some kind of a ripple effect across the globe as well, and some nervousness in the banking system across the world. But on the other hand, we are actually seeing other alternate asset classes really have a good time in the last week or so, especially cryptocurrencies. When we talk about, we've seen the Bitcoin zoom 40% in less than 2 weeks, and there are anticipations that this could be the banking crisis led crypto rally that we've been witnessing. In fact, Bitcoin also crossed $28,000 mark for the first time since June of 2022. And since this collapse, what could be then, the outlook on the crypto world is something that my colleague Akansha Chaturvedi joins us with some insights and data points. Akansha, thanks for joining in. Help us understand what is really fueling the kind of rally that we're seeing in Bitcoin and the other crypto assets as well at this point in time, and what's the outlook, or what have you picked up from some of your sources who've been speaking to?
That's right. Like you said, that Bitcoin has crossed the 28,000 mark, which it was struggling to cross since June 2022. And as you can see, other cryptocurrencies have also gained a lot. You can see Ethereum, it's above 1,700 points, as in $1,700. Binance's cryptocurrency is up almost $330. So all of this is just indicative that the banking crisis in the West has made people realize that cryptocurrencies are, in a way, since they don't have to be bailed out, since there's no intervention of a central authority like say a central bank or a government, that's the reason why people have started putting their faith into cryptos again. But this is like what she has been saying, our finance minister, that the cryptocurrencies are extremely volatile. And like you said, the rally there's been like a 40% rally in just 2 weeks since the Silicon Valley Bank crisis happened. So we can't really expect this rally to continue, because as the past few episodes we've been doing in this for this show, we've been seeing how crypto goes up a few days, then it comes down. So this is not a reliable rally so far, and investing in cryptos right now is very volatile. So that's what experts have been telling me, that
Sure.
this may not be the best time to invest, since the volatility is very high.
All right, so the volatility is still high, not really the best time for you to get into this or chase this momentum in cryptos. Most of the experts have been advising it, and the rally may not be sustainable as of now. Some more data points needed to really quantify this kind of sustainability in the crypto world. Thanks a lot, Akansha, for that update. But Mr. Palviya, I wanted to take your view as well. When we are looking at the equity markets and reports which are suggesting that this could well be a flat year or a year of low return or no return on the Nifty, investors may be tempted to look into the other asset classes as well. We're already seeing how FD rates are at a high. They're giving very attractive rates at this point in time. On the other hand, if one takes the risk and invests into stock markets and then also does not they do not get handsome returns, that may be actually discouraging most of the investors right now to really put in fresh money in equities. How are you looking at this current market volatility vis-a-vis the other asset classes and the opportunities right there, perhaps in debt or in gold or in crypto as well?
So Sakshi, we are not tracking crypto actively, but yes, the nature of crypto market is very volatile. So it's not a cup of tea of everyone's on the retail side, because it requires a lot of awareness. What kind of crypto bitcoins you need to buy at what time, because a lot of volatility is there throughout the sessions for the crypto market. So it's not easy go investment or trading avenue at this moment. But yes, we do believe that if one's equity market is not performing, then one can look at the gold, because gold has given a breakout of its long term on the long term chart, and we believe that this gold really can continue further. So one can divert, or one can diversify their investment in the gold also. They can invest through some bonds, or they can directly participate in the gold market through the exchanges also. So gold can give a good return compared to other asset class at this moment. So instead of Bitcoin, our advice would be diversification can be there, and one can divert some of the capital towards the gold investment also. And this year gold can rally and can give good return. And we are projecting target for 2200 for the gold for this calendar year. So one can buy in declines, and one can invest in gold also for this year.
Okay, buy and declines in gold in this year in case you're looking to diversify your investment portfolio and get into other asset classes apart from equities as well. But for those investors who still want to buy the dips, like you also pointed out, amid this volatility in the equities, what kind of opportunities are you looking at? Are there any particular sectors or top choices in terms of stocks that you have?
So capital goods is a one sector where we find that this sector is looking very attractive, and despite of this volatile market, this sector is still holding the ground. And we believe that once market stabilize, this capital goods sector can continue its upward momentum. So from this sector, we believe that one can look at L&T and Siemens. These two stocks are clearly showing strength, and outperformance is still there. So we believe that L&T is a good buy at current level. One can buy and accumulate for upside target of 2400, 2500 in coming months. One can buy with stop loss of 2100. Another stock is Siemens. Siemens is clearly moving in uptrend, and it's almost enjoying its all-time high trajectory. Since last couple of trading session, it's consolidating in very narrow, and we believe that Siemens is looking very promising at this moment. One can buy and accumulate Siemens for upside target of 3600 with stop loss of 3150. Another sector in this kind of market, one can look at FMCG space also. A lot of buying action we have seen in last couple of trading session. So Godrej Consumer is looking very attractive. Stock is almost penetrating to its multiple resistance zone. We believe that once the stock crosses above 950, 960 zone, then possibly this stock can really further higher towards 1020, 1040 on the higher side. One can buy and accumulate Godrej Consumer with stop loss of 920.
Sure, understood that. And what about Reliance Industries? That is clearly, emerging as a top consensus buy between mutual funds and top analysts right now. Even brokerage firm CLSA has come out with a report that it sees 35% upside in RL from the current levels. It believes that there could be further triggers for Reliance Industries going forward from here. Of course, amid this report, the stock has jumped to its day's high, 2.8% up at 2264. Now, the report points out there are high chances of Jio and the retail arm IPOs in the next 12 months that could further provide some upside to the stock going forward from here. And they also believes that in less than 4 months time, we've also seen a 20% correction in the shares of RIL that has brought the valuation of the conglomerate closer to its conservative estimates. Your thoughts on Reliance Industries? Is this the right time to get into Reliance Industries as an investment opportunity?
Definitely, if you are looking for investment, it's a opportunity to buy and invest at this price also. Because if we look at the overall setup for the Reliance is almost trading near to its previous year, like March. We have seen this kind of low in the March to 2022, and almost Reliance has tested those lows. So 2180, 2200 is the important level for the Reliance for this decline. And we believe that if stocks continues to hold above 2180, 2200 level, then possibly we can expect some recovery from the current level also. On the higher side, 2460, 2500 is the key hurdle for this recovery. Once stock crosses above those level, then possibly stock will start recovering very fast, and then we can expect a bigger target of 2700, even 2800 on the higher side. So for long-term investment, yes, it's an opportunity to buy and accumulate Reliance in this decline, because the stock is available near to its multi-month support area. And this is the opportunity in this kind of market to buy and accumulate Reliance. Once the stock crosses about 2400, then possibly next target, the positional target for Reliance could be around 2700 to 2800.
All right, understood that. Well, thank you so much, Rajesh, for being with us on the show and discussing with us all these insights on various sectors, stocks, and aspects of the stock markets and investments portfolios as well. Let's look at how the markets are trading at this point in time. They've further picked up the momentum, in fact, trading near the day's high at 0.5% uptick for the Nifty right now. 17,080 is the current level at 90 points of an uptake. For the Sensex also, it's building onto the gains, 330 points upside right now at 57,964. Now inching to closing towards that 58,000 mark as well. So we'll keep an eye out on that. Clear recovery coming in from yesterday's losses, but will this sustain is the big question, and we'll keep an eye out on that. And to track all the updates on the stock markets, you should stay tuned with us onto Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in. Until then.